This week's research led me to find something that could change the way you think about XRP, the cryptocurrency market, and even gold. Hold on to your hats, please. As I tell you about what's going on in the Federal Reserve System right now and how it affects digital assets, the stock market could be about to go through one of the biggest changes any of us have ever seen. There will be huge changes that affect everything tied to the US dollar, like crypto, rare metals, stock markets, and even real estate. This news couldn't come at a better time. For people who own XRP, this is not good news for their money. Let me say this first, before we get into the details. Find a 100 times stocks in my definitive Rich Investor Guide if you want a tried and true way to find chances that can change your life. Like 100 times investments that can turn small amounts of money into huge amounts of money. Included are many tools such as papers, photos, videos, and more that can help you find these rare opportunities. I added it to the first comment that goes after this movie. Yes, I'll tell you what's going on right now. In 2025, the Federal Reserve will cut rates for the first time in exactly 15 days. This will be the first time in history that rates were lowered. The market already thinks that a 25 basis point cut is 90% likely to happen at the meeting on September 17th. But this is where the shocking part is. Even though the Fed is about to cut rates, the 30-year U.S. Treasury rate has gone back to 5%. We saw those numbers too during the 2008 financial crisis. Allow it to rest for a while. It's clear that the institution is shaky because of the high returns in a rate-cutting environment. It goes deeper. The current view in the market is that prices will go down by 50 basis points by the end of 2025. With a 33% chance of going down by 75 basis points. That would require a big change followed by 3 cuts in a row. But yields are still going up. Even though rates were lowered a lot last year, banks across the country are still keeping them at 7% to 8%. This makes it clear Fed control is getting worse. A huge spending shortfall is a clear problem that comes with not having enough control. In just 5 weeks, the U.S. has issued more than $200 billion in bonds. Yields are going up because no one is buying. The term premium on 10-year Treasury, which is what investors want for keeping long-term government debt, has been higher than or equal to this number almost every year since the financial crisis of 2008. No longer are we ready to trust your debt because the market is going crazy. The U.S. core inflation rate, on the other hand, is back above 3% and is still going up. It's no longer believed that the U.S. dollar, U.S. bonds, or the government can manage its money well. It's also true outside of the United States. Discover what's out there. The UK's 30-year yield has gone over 5.7%, even though the Bank of England has cut rates 5 times in just 1 year. The first time something like this has happened since 1998. The problem is getting worse all over the world. The main question comes up because of the central bank's stimulus steps. Why are returns going up? The answer is clear and scary at the same time. Investors are losing faith in government debt, so the government has to print more money, run deficits, and issue more debt. It's thought that people will keep buying it. People have used this method for many years. There has been too much printing of money. People are selling more cryptocurrencies than ever before because they don't want to hold on to something whose value will go down. Think about this. Since 2005 to 2010, the value of the US dollar, the British pound, the Canadian dollar, or the Australian dollar has dropped by 20 to 30%. Why would someone keep hoarding something that loses value when there are assets whose supply stays the same or grows? Put your money into stocks, rare metals, and most importantly, digital money. That's why investment capital is flowing into alternative assets at amounts that have never been seen before. Gold hit a new high of $3,600 an ounce hours on Monday night, making history. Putting money into the S&P 500 has hit a whole new level. What about digital money? And then it's time for investors to look for better returns in safer asset types like gold and stocks. They are taking their money out of cryptocurrency. But this is not the end of the story. When these rounds end, the money will start moving again between digital assets like Bitcoin, XRP, Ethereum, and more. The story gets more complicated as things go on, because this is the truth. The only thing governments can do to keep their budget plan going is print more money. When there is too much debt, high yields, and low confidence, the government comes in to save the banks, print more money, and double down. There are no doubts about it, even though it is the biggest and most successful Ponzi plan ever. The good news is that more and more people are becoming aware of this. Where do they run away to when they wake up? They run away to things that the government can't take away. Because of this, crypto is the best choice. Like paper money, you can't just make more of it. Unlike bonds, it doesn't rest on people having faith in their governments without question. Prices in these open markets that are open 24 hours a day are set by supply and demand. XRP is also positioned in a way that most people still don't understand because it is used as a unique form of payment for foreign transactions. Check out how things are going in the banking industry right now. For real people, the costs of borrowing money are going through the roof, even though rates seem to be going down. Mortgages, car loans, and credit card APRs are all at levels that have never been seen before. Because of this disconnect, more and more people and groups are beginning to question the system. Even when it does happen, the switch to cryptocurrency isn't as big of a deal as it used to be. Huge amounts of money have already flowed into gold and stocks. However, cryptocurrency has generally benefited the most and first. Cryptocurrencies like Bitcoin and XRP work because they are naturally scarce. This is different from gold, where the supply is always growing, and stocks, which depend on how much money companies make. When there is too much paper money, things that are rare become worth a lot more very quickly. I believe a new wave is about to hit us because of this. People still can't understand how that could take the cryptocurrency market, and XRP in particular, to new heights. Okay, let's go. Why? Because this change isn't just about interest rates, inflation, and central banks losing power. In fact, what we are seeing is a major change in how value is moved and stored around the world. You'll see that XRP has a lot to gain from the future if you can figure out how everything is going to fit together. The first step is to get back to the 5% return on 30-year bonds. Even though that number might just look like another statistic, in the world of finance, it is a big red flag. This means that it will cost the government more in the long run to borrow money,